Here's what's making cannabis headlines this Tuesday, September the 10th. Aurora Cannabis has closed its previously announced amended and upsized credit facilities with a syndicate of lenders led by the Bank of Montreal. The facilities consist of an additional $160 million Canadian in term loans, as well as a feature to upsize the facility by approximately $40 million Canadian, in addition to the original $200 million in credit facilities, all of which mature in 2021. Canopy Rivers announced its portfolio company, HerbertWorks, has received its research and development license from Health Canada to develop branded cannabis-infused beverages. HerbertWorks' mission is to combine advanced technology with its knowledge of cannabis to create products specifically designed around consumers' many lifestyle needs. Canopy Rivers currently holds 23% of the equity of HerbertWorks on a fully diluted basis. Rapid Dose Therapeutics announced that the installation and commissioning of its quick strip production equipment at Aphria has been completed. Under the agreement, Aphria has been granted an exclusive license to manufacture and distribute and sell RDT's quick strip delivery technology product to the medical and adult use cannabis markets in Canada. In light of the installation of RDT quick strip production equipment, Aphria will now move forward with its production and distribution planning in Canada. MedMen Enterprises announced that the waiting period has expired with respect to the proposed acquisition of PharmaCann. The expiration of the waiting period under the HSR Act satisfies one condition needed to close the transaction, which is expected to be completed by the end of calendar year 2019. PharmaCann shareholders are expected to receive approximately 168.4 million shares in the combined company based on MedMen's fully diluted shares outstanding as of June 29, 2019. Valens GroWorks announced revenue guidance for the recently completed third quarter 2019 in the range of $16 million to $17 million. This guidance shows an increase over its second quarter 2019 revenue of $8.8 million. The company expects to report that it has extracted over 26 kilograms of cannabis and hemp biomass in the third quarter of 2019. Zenabis Global has entered into a supply agreement with the Ontario Cannabis Retail Corporation to supply adult-use recreational cannabis to retailers throughout the province. Zenabis Global will begin supplying OCS with 21 distinct adult-use cannabis products under its Namaste and Blazery brand in the third quarter of 2019. Lyft & Co. released Cohesion, the company's data-as-service platform. Cohesion draws from millions of Lyft & Co.'s cannabis consumer and bud tender data points accumulated through verified reviews, purchase receipts, and brand research on the Lyft Co. and CanSell platforms. By subscribing to Cohesion, Canadian cannabis brands will gain new insights into consumer purchase behavior, product sentiment, and brand perception in one insights platform covering all of Canada. At launch, the average margin of error for Cohesion is plus or minus 7.5% at 95% confidence level for the top 50 cannabis brands in Canada. 1933 Industries announced the execution of a licensing agreement for the launch of Blonde, a high-end California brand making its debut in Nevada. Alternative Medicine Association, a 91% owned subsidiary of the company, receives the exclusive rights to cultivate flower, manufacture pre-rolls, live resin vape pens, and cartridges under the Blonde brand for distribution to licensed dispensaries throughout Nevada under a one-year agreement. And that's your news for today. For the latest weed stocks news, visit the Cannabis Daily on MidasLetter.com.